We love these boring stocks, these stocks that are not in the news, the stocks where the investors are not looking for any sort of gains. Instead they prefer to see some dividends. They prefer to see some potential gains. In other words, they get stuck in a sideways, boring channel. And Teva is one of those companies. And so we had planned on it a couple of weeks ago, and we were looking for a signal to tell us that we should short Teva. And when I say short Teva, what I'm talking about is either actually physically shorting the stock, and the stock is inexpensive enough that it wouldn't be that big a deal. It does require you to have a margin account. That's where, when I say short the symbol, that means you're selling the symbol. You usually have to make an arrangement with your broker using a margin account to borrow some of their shares. You sell it at a high price in order to buy it back at a low price. And when you buy it back at the low price, you give the shares back. The ones that you borrowed from your broker, you give them back to the broker, and you make the money on the downside. But the other way to short Teva, of course, is to buy some put options. Either one of those transactions can prepare us for selling premium. So we were looking to get into that initial position. We got a signal. You can see this little red arrow that I have here. That's my fast MACD indicator. We got the signal, and I'm also going to emphasize for everybody on the call, I'm an end of day trader, which means I look for my signals after the market is closed. And if I get a signal, I then try to trade the next day. And so I got this signal on the evening of June 6th, and sure enough, on June 7th, I got my follow-through rules met, and I opened up a short position, meaning I want Teva to go down in price. And so Teva is behaving just like we had planned for it to. It is going down in price, and I'm now setting up to make my premium trade. And so what we're waiting for here is wherever Teva decides to bottom, that's when we will sell premium. Now, we're going to be selling put options and buying a protective call option. The put option is going to be near term, and the protective option is going to be about 6 months out. The 6 months out option is going to be a little bit expensive, which is fine because we're going to offset its costs with what we make on selling the premium. And then when we, in about a couple of weeks, when we form another top, because Teva just oscillates up and down, up and down. When we form another top, we'll sell back that protective call option and make a windfall. And we're going to just repeat that over and over every month as long as Teva lets us do this. But I wanted to say that we had this wonderful opportunity. We all either shorted the stock or bought the back month put option. And so keep your eyes out on Teva for some nice movements in the future.
Yeah, and so you're saying you're looking for it to hit that bottom there, maybe in the next 2 or 3 weeks. Where
Yeah.
is the next leg of this trade, or at least on the calendar?
And that's the beautiful part, Sip, with our options trading is it doesn't matter when or where it bottoms. We just play it day by day. Once it does bottom, if it decides to bottom here, or if it decides to bottom, even lower, it doesn't matter to us when or where. We just simply react on the next day after it does bottom, and we go ahead and sell our premium, buy our protection, and just let the trade play out.
Yeah, and another thing to note on this one is the price point. I always like to bring this up, that it's in a sweet, juicy price point to get in some options at a much lower cost than if you had to buy the stock outright.
You could actually trade Teva with a portfolio that's maybe even under $1,000. So that's kind of nice. It opens it up to every investor out there, not just the big money investors.